Today is a different kind of episode. We were invited to be a guest on one of the best podcasts for beginner investors, the One Penny at a Time podcast. Together with my good friend Harris, let's sit back and enjoy the video.
Welcome to One Penny at a Time. I'm your host, Harris Elliott. You might be noticing this is kind of a different format from what we've been doing here. So we're going to test something out new with the podcast by having a video feature here that's available on Spotify. On today's episode, we have our very first special guest episode here. I have fellow dividend investor Ron, aka Pinoy Stock Investor, all the way from Hawaii. Aloha, how are you, sir?
Aloha. Oh, great. How are you?
I'm doing good. Hey, man, I appreciate you being able to join me tonight as well. Thank you for being the very first special guest on One Penny at a Time. It's a huge honor to have you on here.
I'm very honored to be the first one, and it's really great because I think that we do share our audience and we do share the goal, the niche of the audience, the beginners.
No, absolutely. And I definitely think that, with everything's going is that obviously on YouTube, there's this whole, there's a lot of really good content creators and they're really good at what they do, but it is for a more advanced audience. And I feel like some of the content out there for beginners, it's usually the same repetitive thing. So you want to kind of add that really good touch to it. So I think that'd be really cool, that we kind of have the same vision and similarities in the portfolio. So I'm really excited for us to do this episode today. So let's go ahead and start off. Ron, tell me a little bit about yourself. What's your background? Are you a hedge fund investor? Are you the Wolf of Wall Street? Give me some background there.
Oh, how I wish. I'm just a small-time investor. I just started investing. Actually, not just started, but I did start my portfolio, and it's not that big. It's not a hedge fund level.
I don't think we'll ever get to the hedge fund level.
I wish.
Awesome. So tell me about yourself. You're from Hawaii, right?
Yeah, from the Aloha State. I came from the Philippines, and now I'm in Aloha State.
Awesome, that's great, man. And then, what's your background? Obviously, we know you're not the Wolf of Wall Street or a super investment banker. What kind of work do you do?
I am a programmer, so I work with websites and everything like that. And then at the nighttime, I am a YouTuber.
Hey, no, I mean everybody's a content creator nowadays, right? You know how it is.
Yeah,
well, that's great. So pretty much the best thing I always like to talk about here, it's you're an everyday person here, just trying to invest and put into your future.
Yep, definitely. I'm not like, I don't have those budgets, those Series A, Series V. I only have my own paycheck budget, as I call it, my investment fund.
I think we're all in that point there. So Ron, when did you start investing in the stock market?
I've been investing since 2019, but I wasn't focused on my investing back then. I was just buying whatever here and there, whatever I see on like what's famous, what are they talking about, what people are talking about on YouTube, like that. But I did focus on my investment around 2020 by March.
So right around the pandemic hits, we have more free time on our hands. So that's really when you kind of started really getting more in depth with it and, getting involved with it.
Yeah. Like reading books like that, consuming a lot of content, and definitely watching YouTubers for one, and then reading blogs and everything like that, and then mostly books.
Got you. Was investing ever part of your life when you were younger, or this is something that you kind of wanted to learn on your own, aka like the YouTube route or the book route?
So when I was growing up, I do want to invest or make a business in something like that, but I don't have the time. Like growing up, I thought working would be the best way to earn my way to riches, and I saw this investing thing like what I mentioned, 2019. And then that's how it started pique my attention. And I saw this movie called Wolf of Wall Street. I think everybody's familiar with that. And,
I mean, it's one of the best movies ever made.
Yeah, definitely.
Except Jordan Belfort's not a dividend investor. Jordan Belfort is all about shorting the penny stock. So a little bit different concept there, but still an amazing movie. It's best 3 hours you can spend watching a movie.
I mean, would I follow it? No. Did I enjoy it? Yeah.
Yes, we definitely don't want to follow Jordan Belfort's
Yeah.
the investing style. Well, that's great, Ron. So that's really amazing. So you've been doing this for over 3 years now, and
Mhm.
I started watching your videos after we met about a month ago, and I started your videos. First and foremost, congratulations on building a portfolio of about $40,000. Is that correct?
Yeah, yeah, yeah. I just reached 40K recently. That was like hard sweat equity.
Dude,
That's what we call it.
congratulations. That's a huge achievement. You know, nowadays, uh, for me, when I started off like really watching on the YouTube sector a couple years back, I would see, for example, I know Andre Jick was a really popular, still is popular, but
Definitely.
back in the day when he did the dividends, I
Yeah.
used to see his $500,000 portfolio, and that's like, I'm never gonna get there. It was so
Yeah.
discouraging. But seeing you like as like your everyday person, that's amazing that you've been able to build that. For congratulations, first and foremost, man.
Thank you. Oh yeah, I mean, I've been watching them too. Andrew Jick, Graham, Joseph Carlson, if you're familiar with him.
Of
Yeah.
course, I
So
mean, he has his Patreon's probably the best value on what he
yeah,
offers.
yeah. So like go, you
Yeah.
would see the value of their portfolio like 100K, 500K, millions, and I'm like, at some point you can't relate how big is the amount of their portfolio. So like when I started, I was thinking, I hope somebody would relate like how I'm starting and how everyday people like starting.
No, 100%. So Ron, I think Apple is the biggest holding in your portfolio. Is that correct?
Yeah, yeah. Right now it is.
Yeah. How many total shares do you have of Apple?
Oh, I actually just today reached my 40th share.
Dude, that's amazing. And because you know that, Apple's not the cheapest stock. So is it what? It's probably averaging like 150 right now. So obviously you probably
Mhm.
have it at a lower cost, but what's your strategy? Are you putting into the market daily, weekly, monthly? Like what's your strategy and how you're doing investing right now?
Okay, let's take a break and do some housekeeping. If you're getting value and enjoying this content, make sure to drop us a like and subscribe. You can also let us know in the comment what kind of strategy are you doing right now on your portfolio. Okay, done? Let's go back to the video.
I have this what I call my daily fund. It's not much,
Mhm.
probably like what $50, $20 like that for every day. And then I have this weekly one, about $100 every week. So what I would do is I would spread it like how M1 Finance is working.
Mm-hmm.
So they would
Mm-hmm.
spread it to your pie portfolio like that. So I would spread
Mm-hmm.
it to my portfolio, and then most of it would go to Apple because that's one of my core holdings. I don't
Mm-hmm.
necessarily pick what amount or what price I'm gonna come in to Apple. I would just buy regularly a dollar cost average like that. I'll be average between the highs and lows on this week or this month.
Got you. So essentially, you're kind of doing a little bit like every day and every week. So you're kind of getting different time periods. So that way, if let's say Apple took a 5% hit, then you have a little bit going there. But say the next day it goes up that 5%. So you're just kind of getting that average out.
Yeah.
Wow, that's amazing. What other holdings do you have, or as far as like our big staple in your portfolio?
I sold something back then, and then I recently invested in Berkshire Hathaway. If you're familiar with, yeah, I think everybody's
Mr.
familiar
Warren
with
Buffett.
Berkshire Hathaway.
I mean,
Yeah,
Mr. Warren Buffett.
yeah. So I'm actually treating that one as a ETF of my portfolio because since they have a lot of holdings on their portfolio, and I'm like I want to be into that one.
Now, next question: which Berkshire are you doing? Are you doing the really expensive one or the cheaper one?
So I'm on the cheaper side. We don't have money. We don't have hedge fund money on that bigger one.
Yeah, if for those who don't know, Berkshire Hathaway is a company that has two types of shares. They got the one for people like us, which is I think it's ranging between like $200 to $400. Then
Yeah.
they got the big one, which I haven't checked that one in a long time, but I think the last time I saw that one, like a couple months back, was at like $350,000 a share or something ridiculous like that.
Yes, you heard that right. It's 350,000 per share.
And that is just mind-boggling.
Yeah.
So, talk to me about your dividend plan. So, is all your companies dividend companies? Do you have a mixture of growth and dividends? What is your strategy right now?
Actually, I started with buying all these dividend stocks. That's what I want. I want the income for
Mm-hmm.
us who have our fund or our portfolio with a small amount. We want that income because we see it because it's real. Going in, digging in deeper, learning, I saw that having an exposure to a little bit of growth would give a really big impact on your portfolio in the long run. Right now, I don't have just a dividend portfolio. I also have growth stocks like Meta and Google.
Got you. Got you. So no, that's good. So I know there's always like this big thing. There's like strict dividend investors, which in my case, my portfolio, my rule is if it doesn't pay a dividend, I won't have it, at least in this
Oh,
portfolio. But it's always that mixture though. I mean, there's in the market, there is no right, wrong answer. It's depending of what fits. It's like, for example, my strategy may not fit your needs. And that's the thing about investing. You should never copy anybody else just to try to do it. So that's what's beautiful about this is that there is no
yeah,
right or wrong. It's what's best
definitely.
for you. So that's definitely really cool that you're doing that there. Obviously, with a $40,000 portfolio, what's the largest dividend that are you receiving right now for like any of your holdings?
So far, the largest dividends that I'm receiving is from one of my core holdings called AbbVie. It's a biotech company. They paid me quarterly about $22. I think 25 now. Yeah.
That's great. So I think Avi right now, I know Avi is a little more on the expensive side. I think right now, isn't Avi, is it like at like 150 right now trading
Yeah,
right
yeah,
about?
it's about 150, 140.
So you're getting $25 every quarter.
Mhm.
That's about that's a pretty good chunk of what the whole stock is. Are you reinvesting those dividends back into AbbVie? Are you spreading them into like other holdings that may have bigger opportunities? What's your strategy?
So when it comes to my dividends, what I do is I wait and I collect them all together for a month, and then at the end of the month, I will reinvest those dividends. So let's say, actually, this coming dividends, this coming September 30th, I would earn my first $102. So my first three-digit dividends. So this coming,
So wow. So is that 102 for the month, or is it like in the lifetime of the portfolio life to date?
oh, it's 102 for the month. Yeah, that's my first
For
time
the
having three digits.
for the month?
Yeah,
Okay.
yeah. And then
Ron, you gotta tell the viewers out there what holdings do you have in that's composing of this $102 a month? That's a nice dinner out. That's your
yeah.
cell phone bill. That's amazing, man.
So it's actually a combination of pie from M1 Finance. So they would
Hmm.
have this pie distributed through all sectors. So what I did is I picked the sectors that I like consumer, defensive, real estate,
Hmm.
technology, and consumer discretionary. And then I picked stocks, at least three stocks in each sector. On real estate, I have Realty Income and Stag Industrial. They pay monthly. On consumer defensive, I have Coca-Cola, of course, for everybody, and then Pepsi and Kroger. So they're actually the big payers on my portfolio. And then I consolidate those dividends, and then at the end of the month, I would reinvest them, making it grow my next dividend next month.
That's really cool. Think about it this way. Let's say I'm going to use it like a hypothetical stag, which we have that in both our portfolios, which is like like the commercial real estate.
Mhm.
Real estate takes the last month has taken a really big hit. So if you really
Yeah,
wanted to, say you get this $100, if you say hypothetically you put it all into stag, that's about right now at least over three shares. And the
yeah,
beautiful
yeah.
thing about that is that Stag pays monthly, so if that compounding in that, it's just going to be doing its thing. So that's Ron, that's amazing that you're literally getting over $100 in a single month of dividends. Props to you, man. And for you, and this is a question I ask: when right now the market is not doing so sexy. It's the last week has been literally the meme of the dog holding the coffee mug in the fire. This is fine. This is okay.
Yeah.
Are you investing no matter what happens, positive, negative? Have you made this like more of a you pay your cell phone bill every month? It's the same concept. I put money into my portfolio every month. What do you do?
Yeah, actually, it's like that. It's like what you said. Before I spend anything personally, I remove chunk of my paycheck and put it on a savings or an investing envelope, and then that I would use it to invest. And right now, since like you mentioned, market is really tanking so much and it's going down, and it's like fire with coffee and the dog. What I do is I consistently buy. It's not because I'm happy because it's going down, but it's because it puts me on a better position on my stocks, because when you buy a lower value, it would pull down your cost basis, making it that your loss technically goes down,
Mm-hmm.
something like that. And
No,
then
for no, for
it
sure.
actually has a higher yield because it's cheaper.
No, 100%. And I think on episode 2 of my podcast, where it's like Stock Market 101, I think I used an example of Coca-Cola where at the high price at like 63, 64, and if it went down to 58, what the difference in dividend yield is, where it's like the same business metrics, the same everything. It's just then you're getting more for your buck.
Yeah.
And right now it's funny how I did that episode and now Coca-Cola is literally at that $57-$58 mark. So maybe I should do more examples of that. I think I want discounts for.
Yeah, definitely. I just listened to it and I'm like,
Mhm.
this is spot on. At the same time, it went down, and I'm like, wow.
No, for sure. Now, obviously, in the world of stocks, there's over 4,000 stocks in the stock market. Is there any particular either stock or business type or company or anything like that that you will not invest in, no matter how appealing it is, no matter what the hype is? Is there something that you will not personally invest in because of either moral values or just something you don't believe in?
Actually, yes. For one, I have this what they call sin stocks.
Mm-hmm.
So those stocks that included are concerned with cigarettes, liquor. I mean, not liquor. I don't think so. I think Coca-Cola is coming into liquor. So probably cigarette.
Coca-Cola actually, Coca-Cola is now doing the alcoholic seltzer with Topo Chico, so they
Yeah,
are
yeah.
kind of dabbling into that. But so in this case, you're talking about like Altria, which is known for like
Ultra, yeah.
the cigarettes, which they
Yeah.
also do liquor, believe it or not. They actually have a small
Wow.
liquor division. So you personally, you will not invest in them just because it's something that you don't believe in personally.
Yeah, yeah. Even if their dividends is so high and consistent, personally, I won't invest in Altria.
Got you. Any other companies or like business types that maybe it's not for you?
Oh, actually, when the market or when the people in Facebook or in social media start talking about it, like AMT or the meme stocks, what they call, I'm gonna stay away. I'm gonna stay away. I can't handle the volatility for one, and when you dig into their fundamentals and they're under the hood, you won't see you won't see any upside on that.
No, for sure. And of kind of how I talked about before, and like it's day trading is gambling, and that's not what
Yeah,
we're here to do. We're here to
for
build
sure.
long term, boring, just doing your thing and letting it build out over time.
Yeah,
I think that I couldn't, the way how like we invest, I don't get emotional, and it's like if everything tanks, it's like okay, fine, it's part of it. But if you're trying to do this for like a day trade, it's too much. I can't do it.
yeah, definitely. For one, it takes a lot of time. That's some normal people. I mean, like us that don't have, because one, we have a job, and then we have these things that's taking our time. And day trading is definitely takes a lot of time. You got to be in the market, and it's like 8 hours.
No, for sure, 100% on there.
Mhm.
For me, the two type of stock like these the stocks that I personally won't invest in. It's airlines and cruises. So anything that has to do with that sector, I don't like the business model. The profits are very slim, and there's a big like when gas shot up, that affects
Yeah.
that, and it's just something that I personally won't invest in. I don't have sin stocks in the portfolio, but I have an ETF that actually has Philip Morris and Altria in the top 10 of their holdings. So that's how I get the exposure there. And like the big thing for me is that I see tobacco going down. Now, if cannabis is growing, which I know Ultra is into that, that's
Mhm.
where I do see like a big boom in that. But I rather get exposure of it in the ETF and minimize the risk, or I don't feel comfortable having it individually on my
Yeah,
end.
yeah, for sure. Me
No,
too.
for sure. Yeah. So I mean, if we're talking about here, you know, is there any stocks right now that you got your eye on, or like you're keeping an eye? It's like this one's looking really good. Should I pull the trigger? Anything you're having an eye on right now?
So I don't have an industrial on my portfolio. So I'm currently
Mm-hmm.
looking at adding an industrial sector or an industrial company on my portfolio. Namely, I was looking at Union Pacific.
Mm.
Yeah,
Yes,
that one.
I
And
know they've had really good growth this year. Like I said, how I say in the podcast, boring is sexy.
mhm,
Railroad company. It is one of the most boring businesses ever. But just knowing the worth of what it is to be patient and investing in these boring businesses, you get the good, over 5-10 years, the growth, the dividends, everything.
yeah,
So it's that consistency.
yeah, and plus the competition on their business is just less. There's only numbers of companies that could compete to a railroad. So for that, I mean, that one is a really good factor for me.
Gotcha, Ron. So, with everything here, with the market, what's your ultimate goal with investing? I know like right now, a big trend is like the FIRE movement. Are you trying to work for FIRE, or what's your goal personally?
So at first it was fire, like retire early, but at some point I was like, nah, it wouldn't be fun. Like you would see yourself sitting on a beach sipping mojitos for like what 2 weeks, and then you're bored. So right now is to build my portfolio up to the point that I could stand on my own with my content creation like that, and share what I'm learning and what I'm doing to everybody that's on my audience.
No, that's great. I know you said that you're from the Philippines there. How different is it with like talking about the markets there? Because I know you had, before we got on the call, you mentioned about how you have a big Filipino following there. How different is it, I guess, with like the conversations or things like that compared to like the U.S. stock market?
Well, when it comes to stocks, Filipinos actually have a way now to invest in U.S. stocks. There are a lot of brokers now that came up. I think the last 2020, they already have a fractional shares in there too, so they can definitely invest in U.S. stocks. What's different is like taxes, how the dividends are treated like that. So they have all those things. And since my audience is starting to have like a lot of following in the Philippines, I have to look them up, learn it, and understand it how it's different.
No, for sure. And by you doing that research, has that made you a wiser, better investor and more knowledgeable on everything? Or what benefits have you gotten from like doing all that extra research from like investing in a different country, which, like how did that help you out with your investing today?
Definitely something that I would say to advise to other investors to look at how investing in other countries, because there's a lot of countries that that can invest in the U.S. stocks,
Hmm.
and knowing how you can help them, like on our side, our like us creators, we're starting with beginners and they want to begin investing in US stocks. The way we can help them is to give them things that they should know before they start, and they should know while they're doing it.
No, 100%. That's great advice there. Last thought question, then I got a bonus question. Is the best advice you can give to somebody who has no stock knowledge, doesn't feel comfortable with the market? So essentially with our target audience that we're trying to reach this podcast to, what advice would you give those individuals?
Now, for one, stick with what you know. So, like, investing is actually like personal finance. It's personal. So you're the only
Mhm.
one who knows what you know, and you're the only one who knows what you're capable of tolerating. So in the market, there's a lot of things that you should tolerate, like volatility, like that. If you know, example for me, I'm working on websites and everything like that. So I'm familiar with Apple. I'm familiar with Facebook. I'm familiar with Google. So I'm okay with them going down, and my confidence on them, like my confidence on, I can see that Facebook will stay for a long time. I can see that Google would stay for a long time, and I could see that Apple would stay for a long time. So I'm sticking with what I know, and it gives me a lot of edge. It's a confidence thing for new investors.
Great. And what kind of like a secondary question to that? Do you need to have $1,000, $10,000 to start off investing?
I would say no, because I started with $100. I started with that
So
just to test the waters, and then from that I started adding $10 here, $5 there, $20 here, like that. Dividends coming in, it started growing, snowball like that, and now I think I'm on a level that I can consistently do it.
So you went from starting off with just a $100 bill to building this up to a $40,000 portfolio. Ron, like you're like I can't talk today. The success stories that people hear about, and you're that everyday person who just literally tries, do their best and be responsible and build up wealth, and that's amazing, Ron. Last question here, not stock related. When you're not working, when you're not doing stock research, when you're not doing content creation, what are some of your hobbies? What do you like to do for yourself?
For one, I love reading manga, or you would see me in the corner reading on my phone. And then I also do read an actual book. I also do basketball if I have time, like that. And then mostly my time is consumed by creating content, writing, like that.
All-time favorite anime, go.
Wait, there's a lot right now. Black
All
Clover
time.
for one.
Got you. For
Yeah.
me, I'll always go to my two classics, Cowboy Bebop, Death Note. Can't go wrong with it.
Oh, definitely. Yeah. Those are classics.
Awesome. So everybody here, one penny at a time. For everybody here, Ron, aka Pinoy Stock Investor, go follow him on YouTube. At the bottom of the description, I will have his link, so you can go ahead and check out his stuff. Very inspirational stuff, Ron. I appreciate you taking the
Thanks so
time
much.
to make this work with us, especially with us having the crazy time zone difference. So
Definitely.
thank you for getting to speak to my audience about how literally, if you literally do you set a goal, you stick at it, you stick with it, no matter what happens, you can reach that $40,000 portfolio. You can reach that $100,000 portfolio. You can reach that $350,000 to buy that one share of Berkshire. Who knows, but
Wow.
it's
Yes,
it's that
definitely.
behavior. It's that behavior, and you're a success story there, Ron. Thank you for sharing your story with One Penny at a Time, and everybody, make sure to go check them out on YouTube.
Thank you so much.
If you want more beginner investing content, I think you will definitely enjoy Harris's podcast. The links are in the description. Be sure to check him out. If you're interested to see the stocks on my portfolio, feel free to check them out in this video.